Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, December 9, 2009. As the broader market continued to weigh concerns about government debt in the countries of Greece, Spain, the US dollar is seeing pressure. Now on Tuesday, Fitch Ratings did downgrade Greece's rating to BBB+ from a rating of A-. Now in today's session, US equities are trading mixed and have been seesawing as a lower US dollar lifted materials as well as energy stocks. It has been fairly light on the US economic data front, with wholesale inventory figures for the month of October rising by 0.3% from the 0.8% decline reported in September. And in terms of overseas economic data releases, Japanese GDP came in lower than initially reported. Now it showed a 1.3% quarterly gain from the initial estimate of 4.8%. And shifting our focus on over to the spot FX market, the Japanese yen did rally on the lower than expected GDP figures out from Japan. Now, meanwhile, the US dollar saw little benefit from lowered market sentiment. And in today's session, the US dollar continues to weaken against the yen, but has paired earlier losses. And the US currency is lower against the euro in midday trade, and euro dollar is back above the 1.47 level. And in the previous session, we saw that euro fell to the 5-week lows against the US currency. Now, one way to trade your views on US dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we will bring you our daily technical trend report for the major FX option pairs. And let's start out by looking at dollar Aussie, which is ticker symbol AUX. Now, in the short term, caution is advised. The RSI is mixed, and the preference of trading central analysts is short positions below the pivot of 112.50, with targets standing at 105.50 and 102 in extension. Now let's take a look at dollar British pound, which is ticker symbol BPX. Now the forecast is choppy, and the pair has rebounded on its support and is currently approaching its resistance. The RSI does call for caution, and the preference of trading central analysts is short positions below the pivot of 62, with targets standing at 58.70 and 56 in extension. And now let's shift our focus on over to the US dollar against the Canadian dollar, which is ticker symbol CDD. Now in the short term, the key short-term resistance is at 108. The key declining trend line does maintain downward pressure, while the preference of trading central analysts is short positions below 108, with targets standing at 102.50 and 100 in extension. Next, let's take a look at dollar against the euro, which is ticker symbol EUI. Now, caution is advised for this pair, as the pair is approaching its bearish channel upper boundary. And the preference of trading central analysts is short positions below the pivot of 68.50, with targets standing at 65.50 and 63 in extension. And now let's move on to the US dollar against the Swiss franc, which is ticker symbol SFC. Now, caution is advised for this pair as it is approaching its resistance. The RSI is mixed and does call for caution. The preference of trading central analysts is short positions below the pivot of 103.50, with targets standing at 99 and 97.30 in extension. And last but not least, let's take a look at dollar yen, which is ticker symbol YUK. Now in the short term, it is under pressure, and the RSI is also turning down. The pair has struck against its bearish channel upper boundary, while the preference of trading central analysts is short positions below 92.40, with targets standing at 86 and 81.50 in extension. And in our next segment, we will bring you our weekly trend opinion. Now, last week, the US dollar continued to show reversal signs following better than expected unemployment figures. And in terms of portfolio performance for IC's FX options, it now stands at 1,222.55% since its inception in August of 2007. And since the beginning of this year, it is up by 591.55%. Now, in this week's trade alerts, the US dollar is showing some reversal signs. So in our last follow-up, Trading Central did recommend calls on the SFC, which is the US dollar, against the Swiss franc. The RSI was breaking above its medium-term declining trend line, and the pair was also rebounding on its support. Now, another trade alert for you is puts on the AUM, which is the Australian dollar against the US currency. The RSI is shaping a bearish divergence, and therefore Trading Central analysts did advise earlier this week on Monday to buy puts on it. And on Tuesday, Trading Center analysts did recommend considering buying puts on the BPX, which is the US dollar, against the British pound. Now, the pair has struck against its resistance and is currently challenging its intermediary support. Now, looking ahead to next week, Trading Central analysts will be looking at the PZO, which is the US dollar, against the Mexican peso, as well as the YUK and CDD. Now, they will be looking at the YUK because it does remain within a medium-term bearish channel and should face further weakness. And they are looking at the CDD because it has rebounded on its support, but it is approaching its medium-term declining trend line. And last but not least, they will be looking at the PZO because it is a bit choppy, and it did fail to accelerate on the downside after having broken below its support. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.